Spanish bond yields are reaching a new euro era high this morning because the Spanish government said they expect GDP to contract more than expected next year. NRG Energy is offering $1.7 billion to buy Gion Energy, which would create the largest competitive rate power company in the U.S. I'm Lindsay Bell, and the morning call starts right now.
Good morning. I'm Mark Sperling for T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the Morning Call Express. On Friday, we saw the Dow and the NASDAQ go into negative territory for the month of July. The S&P was hanging on by the thread, but the stock futures are pointing to a down open this morning, thanks to more worries out of Spain and Greece. How are you setting up trading going into today?
Right now, I have the spider chart up. We're living in an ascending channel at this point in time on a little bit more of a macro level, going back 3 months. So we've been living in there. Every time we get to the top end of the range, we have sellers coming in. Every time we get to the bottom end of the range, we have buyers. So right now, 134 would be that bottom end of the range. Ideally, you'd like to see us stabilize if we get down to that level at this point in time.
We're deep in the midst of earnings season. This week we have 175 companies in the S&P 500 that are reporting. A number of tech companies are going to come out. High beta tech's been a favorite trade for a lot of people, I think, this year. Apple's going to come out on Tuesday. Now, these guys have typically been the under promise and overperform, but there are analysts out there that are concerned that they actually might miss earnings this quarter, given to the macro slowdown in Europe and China, and also the late introduction of the MacBook refresh. What are you seeing in the stock going forward? It was kind of a volatile stock last week. It started out at 605, went up to 615, ended the week at 604. What can we do this week? Are you trading going into that earnings report?
I feel like I'm always looking at Apple. It certainly has to be on the radar, especially that earnings are coming out on Tuesday after the bell. I understand the fundamentals. The analysts are coming out saying, no new product launch, possibly a little bit of weakness could happen with the earnings. We'll have to wait and see. It's still best in breed. Above 620 will be the trigger buy for new longs to get back involved, probably testing new highs at some point in time. But in the same breath, below 580, look out. This market will have some real selling pressure if it actually does come in a little less than expected. Right now, technically, as long as it's holding 590, and even today, from a trading point of view, 597, 598, I'll probably be looking to get involved a little bit this morning from a short-term trading point of view. And for a move back up to like the 605, 610 level, it might hover, obviously, before earnings.
Amazon's going to report earnings after the close on Thursday. The stock had 4 days up out of 5 days last week. It's been trading well, but is it going to be able to trade through the levels of resistance that it's been hitting recently?
The difference in Amazon and Apple is Amazon never seems to beat earnings expectations, yet it always seems to stay up here. Mm-hmm. And I think it's the bigger story of how Bezos plays the company out and looks for the longer term. And so right now, based on technicals, above 231, 232 would be a new buy level for Amazon. I'm probably not going to do a whole lot right now. It's at the top end of its trading range. Gets back down to 225. Maybe I'll look to nibble a little bit on the long side, but I'm going to wait and see what happens with earnings.
Okay. Now the ag stocks, these guys have been pretty strong as of late. What are you seeing in the charts there? Is it something that we could get long maybe?
Well, I think
in this choppy market.
It's one of the strongest sectors at this point in time. You're looking at the corn and what's happening with the drought across, if you're looking at a macro level, what's happening. But technically, every single ag looks great to me, and every pullback should be buyable until it breaks its 50-day moving average, in my opinion. Start with best in breed. It looks like CF, looks like roughly 198 to 200 is the buy area. I'll probably keep a tight stop across the board with weakness in the tape. Probably 190, anywhere from 194 to 193, ideally. AGU, another one, gapped up the other day. Looks like it's holding above 90 at this point in time. Probably try to buy close to 92, 93 for a move back up to the par number 100. And pot doesn't seem to really be getting the legs that the other ones are having, but I still like it. And anywhere close to 45, I'll probably be getting involved. I think there will be a trigger above 46 for a new move to 48.
Well, we're going to talk about this and more in the long-form version. Home builders have also been another area of strength in this market, so we're going to get into that in the long-form version, so stay tuned.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.